Public finance. Understanding the backbone of a nation's economy. Public finance is the branch of economics that studies how governments raise and spend money to meet the needs of the public. It focuses on managing the country's financial resources effectively to promote economic stability, growth, and social welfare. Understanding public finance is important because it directly affects taxation, government spending, debt management, and economic policies that impact every citizen. Public finance mainly covers three key areas: public revenue, public expenditure, and public debt. Public revenue refers to the income generated by the government, mainly through taxes such as income tax, corporate tax, GST, and customs duties. Non-tax revenues include fees, fines, grants, and income from public sector enterprises. A sound revenue system ensures the government has enough funds to run essential services. Public expenditure involves how the government spends money on various sectors such as healthcare, education, infrastructure, defense, and social welfare schemes. Efficient expenditure boosts economic growth, creates jobs, and improves living standards. However, excessive or unplanned spending can lead to fiscal deficits and inflation. Public debt is the borrowing done by the government when revenues are insufficient to meet expenses. Debt can be internal, from within the country, or external, from foreign lenders and institutions. While borrowing helps finance large projects and manage emergencies, excessive debt can harm long-term financial stability. The objectives of public finance are to ensure the equitable distribution of wealth, maintain economic stability, encourage economic growth, and provide public goods and services that the private sector may not supply efficiently. Public finance also plays a key role in reducing income inequality through progressive taxation and targeted subsidies. Public finance is vital for fiscal policy, the government's strategy to manage the economy through taxation and spending. During a recession, expansionary fiscal policy increases government spending to stimulate growth, while during inflation, contractionary policies may reduce spending or increase taxes to control price rises. In modern economies, transparency and accountability in public finance are essential to prevent corruption and misuse of funds. Governments now adopt digital tools, budget reforms, and public audits to ensure funds are used effectively. In conclusion, public finance is more than just numbers in a budget. It is the framework through which a government ensures sustainable economic development, social justice, and the well-being of its citizens. By managing revenue, expenditure, and debt wisely, public finance strengthens a nation's economy and builds a better future for all.